Hello and welcome to Crux Investor. We spoke with Mike Young of Vimy Resources earlier today. Great conversation around the macro and obviously some of the changes that have been going on in his company. If you want my take on the conversation with Mike Young today, you can get that at cruxinvestor.com/club. I talk about the implications of some of the things that he said and our view on the company. We also give 2 to 3 minute summaries of all interviews on there, perhaps saving you a little bit of time. There are detailed company reports, quite interesting content in there, worth a look. We also look at training modules and courses for our club members. And of course, we get commentary from market experts from all around the world. And there's a thriving community of intelligent investors who share their ideas and thoughts with each other. So definitely worth a look. And if you go there now, you'll get a 7-day free trial. And of course, we'd love to hear your thoughts. So do click the like button and leave your comments. You can also look in the description below. If there's anything interesting in particular, click the number beside that topic. I'll jump you through that part of the interview. And if I could ask that you click the subscription button, and of course, more videos like this one, click the notification bell. Mike, how you doing, sir?
Very well. It's great to be back on.
It's great to have you back on. It's been so long, so long. You've been a busy boy, though.
Yeah, I have been. COVID hasn't slowed us down at all. We've had the DFS refresh come out about a week and a half ago, and then we had 2 announcements soon after that about KPMG coming on as a partner, a corporate partner, and then also getting some very important conditional management plans done. And so we got lots to talk about today, but I just want to say, I wish I was in London talking to you, because this is about exactly the time we'd be at the WNA.
That's right. London. That is right. But that is not happening. And I'm not quite sure if any conferences are happening. We've got a brave new world of online communication happening at the moment, which I'm not sure if people are enjoying it as much as meeting face to face. I mean, what's your take? Would you rather be shaking hands, pressing flesh?
Always. I think you pick up nuances and your relationships develop much better when you're talking to people face to face. Fortunately for us, we've been around in the industry for quite a while, so we've already established the credibility. So it's easier to do the video conferences, especially with the US utilities, who we all know very well. But you always prefer face-to-face, because you can just relax a bit more and have a beer, and you can finish your meeting and go, hey, why don't we go grab a beer? And it's very hard to do on Zoom.
Yeah. It's cheaper though. That's the good news. That's the upside, one of the upsides. Less flying, even better.
That's true.
Even better. Hey, well, been a while since we spoke. What have you been up to? You're a keen cyclist, I remember. You've given me some cycling tips before we started filming, which I thank you for. I'm going to join the club. It's happening. Peloton first, and then I'm going to need some bike advice.
Oh, I've got plenty of that. I've got you saw on Twitter on the weekend where I posted my art, which was my 4 of my bicycles. But those are the main antagonists there. I think I've fallen on all of them.
I'm not sure.
Off to the side, out of frame, which you wouldn't have seen, are the 3 helmets that are cracked.
Right.
So
I'm not sure you're the guy I need to ask for advice if you're falling off bikes. That's it's not a good start. Well, Mike,
there's 2 types of cyclists, Matt. There's 2 types of cyclists: those who have fallen and those who are going to fall.
Right. You're putting me off. Maybe I'll just stick with the Peloton. Mike,
stick with the Peloton.
Why don't we kick off and give people, because it's been a while, give people a 1-minute overview of the story, where you're at today, not necessarily the sales pitch. We'll come on to that, and again, for people new to this as well.
Sure. So Vimy, we have the Mulga Rock deposit, and then we also have an exploration play in the Northern Territory called Alligator River. But Mulga Rock's our main game. Back in 2018, we published a definitive feasibility study, which at the time was, we were very happy with it, and the market seemed to like it. 2 years has passed, and we decided we would review that study with a view to getting some of the costs down if possible. And so we just this month, or late last month, released what we call a DFS refresh. So we didn't look at any of the technical matters of the DFS. We just had a look at some of the commercial matters, and we can talk about that in a bit more detail. So that we've been doing a lot of work on that, very detailed deep dive. It's been very, very good for our team to do it. And the results were very good. We're very happy with the results. It's a much better project economically. As I say, we'll get into those details. And then to forward the project, we mandated KPMG as a corporate advisor to help us to find partners for both those projects. Mulga Rock's a big project, and with our market cap where it currently is, we may need some help to get up and going. But that's not to say that if the conditions improve quickly and our market cap recovers, we could certainly do it on our own. We certainly have the capacity to do that. And then finally, some very important environmental management plans were approved by the state government, and these are the foundations for the rest of our secondary approvals. So I guess the door is now open to moving towards production. And while that's all been going on, we've been monitoring the uranium market with Scott Hyman in America and keeping very busy and very in front of all the utilities, waiting for the day that they start contracting again.
Thank you very much. I mean, we have a sort of weekly uranium show. So we've kind of got a series, it's been going for about 5 months now. And we talk about some of the macro events that are happening in the world. And, for people who invest in uranium or and uranium companies, you've got to believe that macro story holds true. So wouldn't mind your opinion on some of the moving parts there before we get into your story, which is why we're here to talk today. Obviously, US utilities, people seem very, very reliant and dependent and look to US utilities behavior. What do you think is holding them back?
Well, certainly COVID combined with the refueling cycles that they have in the spring certainly kept them very busy. We know from our discussions with the utilities that they had to manage COVID. The safety of their people were their highest priority. Which should be no surprise, but they had to manage COVID. One of the things about the refueling cycle that happens each spring and each autumn in America, because that's the sort of shoulder of the seasons, if you like, in terms of electricity demand, is that there is a group of people who are specialists who travel from utility to utility carrying out a lot of the work. And because of COVID, that process was slowed down or delayed. Notwithstanding that, Exelon actually had a 14-day refuel, which I think was one of the fastest they'd ever done. But the rest of them, COVID did add a complication. And on top of that, of course, you had the other external issues that have been going on, the remnants of the Section 232, the Nuclear Fuel Working Group, the Russian suspension agreement, and finally the Iranian sanction waivers. So all of these things were causing uncertainty. And there was certainly no mood for the utilities to dive into the market. And as you well know, when prices were lower in 17 and 18, they were building up their inventories. We saw that the inventories in 2019 basically remained essentially flat. So they've been managing their inventories, a little bit of carry trade, not much. One of the major utilities closed off an RFP last week. There's in Trade Tech this week, they're talking about 3 more utilities coming out. So look, it was really interesting. We had one of the utilities was on a conference call we had here in Australia, and somebody pointed out to the fuel buyer, there's a shortage of uranium this year. We're mining far less than we're burning. Prices will go up. Don't you guys worry about it? And his exact words were, I remember committing it to memory because it was beautiful. We worry about tomorrow's problems when we get to tomorrow. And that's really quite telling, because that tells you how the utilities think. They don't think like commodity buyers. They think like people who are buying something for a process. So they're just buying stock for their process. And so they don't, when you do the maths, and we've talked about this before, the difference between $35 a pound and $55 a pound is 0.125 cents a kilowatt hour. That's the difference. So they're not going to spend money to put uranium on the dock and have it just sit there when they could be using the money for other things. A lot of competing interests for the chief nuclear officer in terms of, maintenance. They want to buy at the lowest price possible, of course. But the decision they now have to make is, do they want to be the first guys in at 50 or the last guys in at 70? And really, that's what it's going to come down to. You had Brandon on a couple of weeks ago, and he was talking about how the utilities buy in a spectrum of prices. There is no this imaginary price. There's no price. There's no benchmark. This is a spectrum of prices. And so, for people like us, we want to jump into that spectrum, and that's why we spend so much time with the utilities to make sure that when they ask us to jump, we're there jumping.
It's kind of interesting. You mentioned Exelon there, 14-day refueling period. Great. But they've also announced planned closure of 2 nuclear reactors. So maybe a bit of saber rattling, maybe. But they've got options. They've got cheap natural gas. They've got the renewable wind, solar, etc. So they've got a lot of optionality there. So what's your take on potentially, I think some people position it as a game that is being played by utilities to maybe force the US government to kind of step up and contribute towards some of these very large infrastructure costs, whether it be for upgrade or for new reactors?
Look, I think there's certainly an element of that. They certainly wouldn't be saying we're going to do this if they wouldn't follow through. You wouldn't want to be playing poker with Exelon. But happily in America, you would have seen the Democrats have now gone, I wouldn't say they've gone pro-nuclear, but they've gone, what's the terminology they use? Technology neutral is the best you get from a lefty in a pro-nuclear stance is technology neutral. So after 49 years, the Dems have finally said we need to look at nuclear. So I think, America is seeing a sea change. You can look at the statistics out of California by closing their nuclear plants. They've got rolling blackouts. They were held up as the poster boy for renewables, and that's clearly not working. They're sort of suffering the same problem as Germany, high energy costs and unreliable power sources. So, look, my view is, yes, they are threatening to close some plants down. They are facing asymmetric government subsidies because, when the wind's blowing, the government takes the electricity from the windmills, and that is a form of subsidy. So what they're asking for is a level playing field, and on a level playing field, nuclear does compete. It is competitive. So, I don't know what's going to happen, but I would hope that those plants stay open. If they do close, there's still a market there. It's not a huge hit. We're seeing growth in other parts of the world, predominantly China, the Middle East. So there is net growth. The uranium has to go somewhere. Our preferred market is the US. We've said that. But with KPMG coming on board, we're looking at other options. We're looking at perhaps there's partnerships with off-takers that we could explore. Certainly not in America. They just go for straight uranium sales. But that's certainly something we'll look at. And certainly KPMG has got a very wide mandate.
Do you not get frustrated with the inaction in the marketplace? Because you've hit upon some of the things which are perhaps holding utilities back. The Russian suspension agreement, Iran sanctions. You've obviously the effects of COVID. US elections. Those sorts of things are having an impact on decision making. It seems, it would appear, but at the same time, the amount of demand that has come out of the amount of supply, that's come out of the market because of COVID, in terms of, Cigar Lake shutting down and it's just restarted. You've got, Kazatomprom saying they're not going to replace the lost pounds that they've, from the last few months. Does it not frustrate you that the market is not seeing that? The generalist investors that you may rely on for future growth aren't into that level of detail. They just look at the spot price, which hasn't, it's had a little raise up to about $34. It's back down around 30. There's a huge disconnect somewhere, but people can't seem to understand why that disconnect is there. And if I look at your share price, it's struggled.
Oh, please don't.
No, well, I am. It's struggled for the last,
I do too. I mean,
3-4 years, Mike.
I don't mean to be glib.
No, I know you don't.
I don't mean to be glib, and
that's the question I'm asking, Mike. Is your share people are not seeing the growth potential for you, either because of the macro, or because of what's happening locally. Is it a case of people don't think you're going to get the permits that you need? I mean, where do you think the disconnect is for your company?
It's a really great question, and the word disconnect is very apt because in one of our previous presentations, we do show the historic share price and metal price from about 2015, and about 3 years ago it did disconnect. And I put part of that down to market fatigue. We are our own worst enemy in terms of predicting the future. None of us got it right. We were predicting a nuclear renaissance 2 years ago. We got that wrong. I think people are getting tired. Certainly all of our peers suffered the same general disconnect from the price as we did, but you're right, we haven't performed as well as our peers, and it is frustrating when you look at the news flow that we're putting out. You look at the DFS refresh, it is frustrating. And I think part of the problem is people do spend a lot of time looking at the spot price, and Mike Galkin and myself have done that to death. So that's you're flogging a bit of a dead horse there, telling people not to look at it because that's the only handle they have. With respect to the supply demand supply imbalance that we're seeing this year, the fuel that they're burning in the reactors this year, they acquired that 4 or 5 years ago, and that's the biggest problem with this market, is that there's this huge temporal time lag, and all we can really do is just keep on doing the things that we said we were going to do, keep delivering on our promises, and unfortunately wait for that existential event that then catalyzes the spot price that seems to catalyze investment. Now, anyone who can see past that and is a long investor, obviously they're going to look at someone like Vimy. They're going to look at the DFS. When you're looking at our all-in sustaining costs, we are now competitive with the high-cost Kazakh operations in terms of all-in sustaining costs. So anybody looking around going, gosh, where am I going to put my money for the best leverage? Well, Vimy's in a very small club. And then you look at the team and you've got a bunch of people who've built mines before. So yes, I get frustrated. And that's why I cycle so much. You can actually plot my frustration by the number of kilometers I do every week. No, look, cycling is a good release and there's lots of pressure, and I want the share price to be higher. We're certainly doing everything we can to do that. But people have to buy the shares, and happy to take advice, Matt. You've seen it all.
Well, we've certainly spoken to a lot of people, and again, coming back to this weekly show that we do around nuclear, which is on cruxinvestor.com/club, we talk about all of these macro components and their impact in the marketplace, and they're complex things. In the sense there's a kind of geopolitical component to what people say and what people do aren't necessarily correlated. There is this supply-demand story, which is, I think, well understood by a few, but is not understood by the many, because they would expect under normal economic rules that the spot price, which is why they judge it, to move. But of course, you and I know it's contracting is a big part of this, and as you referred to earlier, contracts have different price points during the term of the contract. That's the way it goes. It's very, very rarely one fixed price over a period of time. And this huge inventory with utilities, not just the US, but also European utilities over about 3 years, they don't have to make a decision anytime soon. So for you guys, that's tough to go and tell that story because it's complicated. It's really complicated. So what's the kind of pushback that you're getting when you're sort of going out there, doing these sort of virtual roadshows at the moment?
The biggest question we get is both approvals and contracts. So there's no questions on the viability of the project, on the risk of the project. Very few people ask about that. They always ask about when are you going to get contracts? And those are people who understand the market, who know that the contracts are going to drive what we do. And they do ask, why is the spot price so low? And then the other questions about approvals, and that's why the announcement on the conditional management plans was so important.
Okay, can we talk about Australia, please? Because I want to step away from macro because we kind of talked it to death, and I think most of our viewers understand it. They get it. Australia is not a territory they know in the context of uranium. Obviously, gold,
Sure,
had a gangbuster year or so. Australia doesn't seem to be pro-nuclear, doesn't seem to be pro-uranium, therefore. So what are the difficulties being a uranium miner in country, and what do people like Julian Tapp have to manage on a weekly basis?
Great question. So in Australia, you've got obviously different states, and each of the states have they run the mining in the states. Mining is not a federal issue. Uranium, only the export license is federal, and that's not political. That's just done through bureaucracy, and that's very simple thing to get. So Western Australia has a Labor government. They're against uranium mining, but before projects, which was Yeelirrie, Kintyre, Toro, and ourselves, which had received ministerial approvals before the election where the LP won, they're allowed to proceed. And as getting the approvals recently show, they're not holding us up in any bureaucratic way. So they're allowing the process to go through. And in fact, the Labor Party in Western Australia is a very broad church, and most of the leadership group, I happen to know for a fact, are actually technology neutral, which is the euphemism for a left-wing person who's pro-nuclear. And then you go to Queensland, and Queensland has banned uranium mining. New South Wales is looking at allowing uranium exploration. So each state is different. Australia has a long history of anti-nuclear activism, and I think the reason for that is that the British did weapons testing in Australia. And so people conflate nuclear power with nuclear weapons, which is wrong. But when you're looking at emotions and ideology, there is no wrong and right. There's just belief and not belief. So that's got a lot to do with it. And look, yes, it is more difficult. Gold would be easier. Even lithium would be easier these days. But this, when I first looked at Mulga Rock and first got involved, it was just the sheer size of it and the sheer simplicity of it that attracted me to it. And I knew that it was going to be difficult. And that's why I brought Julian Tapp on board. And Julian, he's working through the approvals. He only works for us part-time, as you know, because we don't require him full-time, and we do want to keep our costs down. But he's a very important part of our process, and the way that he moved these environmental management plans through was brilliant. And he'll do the same for our works approval and our mining proposal. Okay,
well, let's talk about those things, because I wondered, what next? Because there is a process you've got to get through to be able to become a miner, a uranium miner in Western Australia. Okay, so there's some hard yards ahead of you, and it's going to cost money and it's going to take time. So can you give us a sense of both of those things, please?
Sure. So there's three things you need when you start a mine here. You need your mining tenure, which we have. Very important to highlight that. We've got mining leases and what are called miscellaneous leases for the entire life of mine. Very important. You sometimes need a native title agreement. Now, we don't have a native title claim on Mulga Rock, so that was something we didn't need. We are literally on unallocated Crown land, which I think the only other place in the world that has that is Antarctica, but there's not a whole lot of that in the world. So that was another big tick. And then the third thing, of course, is your ministerial environmental approvals, and we have those. Then what happens, it's a bit like if you buy a house, Matt. You buy a block, you have to go to the council and get permission to build a house, and there's a bit of toing and froing about how many windows it's going to have and toilets and whose yard you can see into. We've gone through all that, and then you have to get a building permit. And you have to get a building permit if you want to put a deck up or a garage or a tree fort. There's just permits for everything. And that's the stage we're in. We're in the building permit stage now. But before those permits could be done, we needed to know what the environmental limitations were for our emissions. And that's CO2 emissions, that's our tailings, the water that we use, the spraying that we use for anti-dust, our re-injection bore field. All of that is covered by environmental management plans. Everything, soil, the whole thing. It's very, very complete. In fact, if people are looking at ESG and buying uranium, there aren't very many countries in the world, maybe Canada and ourselves, that have the environmental standards that are required. And as an aside, Matt, that is something that really frustrates me about environmental groups. So rather than fighting us and trying to stop us and letting them buy material from another country where the standards aren't as high, they should be joining with us and making sure that we are mining at world's best practice. Anyway, so now that we have these environmental management plans, we can now move to the mining proposal, which in that proposal will say, we're going to mine like this, and we will stay within the limits that have been imposed by the environmental management plans. So that's the stage we're at now. We're moving forward with the works approval and the mining proposal.
So the question was, how much money, how much time?
All the money is just manpower. So it's really Julian working 2 days a week. That's how much money it is. We also have a young woman who's just returned from maternity leave, so she'll be helping Julian as well. She's a fantastic environmental engineer. So that's all it is. It's just desk time. So it's not that expensive. And then timing wise, we're hoping around 6 months to get those approvals done.
Okay, so why raise 5.5 million? What are you going to do with 5.5 million Australian dollars?
Yep. So part of that was certainly the refresh. That was expensive. That was engineering time We didn't do any more test work, but there was as I said, it was a very deep dive, and we had several people from geoengineering working on that. Because we have mining leases, we actually have quite high rents and rates. We spend about $2.2 million a year on government rents and rates and charges. And that's because we have those mining leases. Now, without those mining leases, we wouldn't be getting off the ground, because that was the secret to getting the approval from this government. And then we've got some activity up on the ground at Alligator River, where we were hoping to do some RC drilling up there this year. But unfortunately, one of the heritage surveys was delayed for family reasons of the people up in country. COVID has certainly slowed us down, but we have a very good COVID management plan. We actually have people on the ground up in the Northern Territory. So some of the work will go into that. And then with that money, we would hope that we won't be going back to the market. Certainly this financial year is our goal. And then I would hope that the market has recovered. We're announcing contracts, and that the share price is much, much higher before we have to go back to the market.
Okay, given you've got it wrong for the last 2 years, everyone has. Why do you say that? Why
do I do these videos?
Right, but that's my point. You can't know at the moment. The market has been quite bizarre. You've got utilities sitting on 3 years worth of inventory. They will make the decision as to when contracts get signed. So you must have had a view when you raised 5.5 million as to the reality of the situation. And I know you've got to get that balance between not trying to shock the market with what you perhaps think versus, this is enough to kind of get us down the road a bit, keep the lights on for a bit, pay the rents and rates for a bit, cover the G&A. I mean, what was that debate you had at board level?
We did have that debate, Matt. That's a very good question. And what we were getting back from people was people were getting tired of seeing a raise every 6 months. And what they said was, get one done, get it out of the way, get some clear air, get your balance sheet healthy. Because as you say, you don't know. You don't know if the utilities are going to come back this year. I suspect, I know for a fact we're getting close. Or you don't know if they're going to come back in a year. You just don't know. But going back to the market every 6 months was just getting very tiresome for people. The money came out of the blue. We were actually approached by a group out of Melbourne, GK Capital Partners, who said, "Look, we've got this money in the tin. What do you think?" And because we had the money there, most of our existing shareholders put in. Some didn't. That's their decision. But we've got some new shareholders on board, and we just took the view, let's get the balance sheet firmed up.
Did Andrew Forrester put more money in?
No, he didn't follow his money this time.
Okay, why not?
Which is good, because we would have had to pay a bunch of people back.
Okay, let's go with that. Okay, so GK Capital have come in and said, right, we'll put this money in. You hope not to come back to market this year. That kind of feels like a 6-month plan to me again. So if you do have to, what would be the reasons or conditions under which you would have to come back?
This financial year.
When is your financial year end? Sorry, let me start with that.
June 30.
June 30. Okay, fair enough. Fair point. You also said there that you know that utilities are coming back soon. So was that Scott's work, or why do you say that? Why do you say you know?
Yeah. So we. The way the market works is the utilities put out RFPs, but between the RFPs and between the utilities, there is a lot of off-market work that we do. Having Scott in the States is certainly, we didn't see COVID coming, but having him in the States has certainly been a godsend. He's 30 years in the industry, so a lot of times this is a relationships market. And, rather than us spending years and years and years getting to know and trust the utilities and vice versa, they're dealing with a guy they've been working with for 30 years. So we get a lot of intel through Scott, get a lot of insight with RFPs that we've actually submitted and obviously failed. We haven't announced any contracts yet. We do get feedback on what the thought process was as they went through the RFPs. They refer to the big five, being Uranium One, Cameco, Orano, BHP, and Kazatomprom. So they call them the big five, and then we come into the next tier. And so that's sort of feedback. You were asking me earlier about, am I frustrated? Well, yes, I'm frustrated, but I know what the utilities are telling us, so that kind of sustains me. Look, I'll be frank, Matt. There's a big gold boom going on right now, and with my experience, people saying, "Hey, would you like to run a gold mine?" And the fact of the matter is, I can see the finish line here. It's yes, it might be the tape might be moving away a bit, but there's a tape there. There's a finish line there. And you had Brandon on recently, and he was also talking about the same thing. The fact the utilities have to come back, and when you look at the all-in sustaining cost curve, they have to pay between 55 and 75 to sustain that production. So when you're armed with all of that and you see you have this deep inside knowledge of the market, you keep going. And what's interesting is when you see guys like myself, Brandon Munro, Duncan Crabb, guys who've been in the industry for a long time, we have this other boom going on, and guys like that easily hireable, not leaving because we actually believe it, because we have that innate knowledge of the industry. And it is, I wish I could put a tinfoil hat on me and a tinfoil hat on the investors and say, here, this is what I'm thinking. This is what I know. And then they'd say, oh yes, I'm going to buy some Vimy. So yeah, I got very strong belief in this sector because of the amount of time we spend inside it.
Okay. Now you've done the environmental, or rather the environmental management plans have been approved, but just by what you're saying, it's kind of easy sailing from now.
They are certainly the hard bit. Yep, they were the ones that were very detailed in terms of, I'll give you an example. We were having discussions about how far from the road we would monitor for overspray from the plume from spraying on the road to keep dust down, and how often we would sample and how deep the sample would be. I mean, it was detailed, and only a guy like Julian, who you know well, could deal with that. I would have been dropping the F-bomb. But Julian's, he's hugely intelligent. He's infinitely patient. And look, to be quite honest, the guys in the Department of Water and Environmental Regulation, they were fair. They were asking the questions that need to be asked, and we responded, and we got the management plans approved.
Okay. But what I'm saying is you've got no concerns about your ability to get the rest of the approvals that you need to get into production. It's just easy.
No, there's no political decisions. So the approvals process is a bureaucratic one. Now, having seen Yes Minister, that might put the fear of God into some people. But we've got our own Humphrey here with Julian. So no, we've never felt that the approvals would be a dead stop. We know they would take time. Certainly, Western Australia is extremely busy right now. Julian does work for some other companies, one of whom is doing potash, and he's finding that the approvals process there is pretty much the same speed as it is for us. So we're seeing nothing that indicates that there's a resistance to our approvals process. We just have to, we're in the same queue as the gold miners, the lithium guys, and we're just marching forward.
Okay, let's talk about your DFS. Okay, you've refreshed it. What assumptions have you changed? What are the key assumptions that you've changed?
Yeah, well, firstly and importantly, I'll talk about things we didn't change. So what happened was in 2019, Marcel had just joined us. Marcel has a lot of experience in project management, and he said, well, we agreed that we should do a review of the DFS. We had some gentlemen come in and review it, and what they found was that the mining strategy and schedule and the flow sheet, the metallurgical flow sheet, didn't need to change. They felt that the work that had been done was world class. The fact that we'd done pilot plants for both the pits and the metallurgical flow sheet, they said was absolutely outstanding. What they did see, though, was that the owner-operate model that we had for the mining fleet, which we had done in the DFS to reduce operating costs considerably, the owner-operator model didn't work. And they felt that we had too many people on site. So they looked at our staffing. I'll give you an example. We had 27 people working in the lab, and as it turned out, we didn't need that many. So a little bit gold-plated. So they went through it, fine-tooth comb, gave us a bunch of recommendations, and we basically went through with the engineers who did the original DFS so that there was no competitive tension, and basically went through it literally line by line. I remember seeing a line in a spreadsheet with $4,000 a year for faxes. Obviously, that's come out. But where we got the most savings was on the mining fleet. So where we were going to buy a new mining fleet for the life of the operation We're now looking at buying refurbished equipment from a earth-moving contractor that did the test pits, who is based here in Western Australia. And they actually are one of only 2 earth-moving contractors in Western Australia who actually have the workshops to refit equipment. And what that means is that we'll be buying equipment much cheaper up front, and then we buy new refurbished equipment during the life of the operation out of sustaining capital, which is in the all-in sustaining cost. And they'll also come on board and they'll do a cost plus. They'll operate the equipment even though we own it. So it's basically a hybridized owner-operate contract model. And it's really the best outcome. And the fact that we saw these guys come to site, dig the 2 test pits profitably for them, and they were by far the cheapest contract that was tendered, and they did a fantastic job, and they were happy with the outcome. I think that's an outstanding result, and that's about 60% of the savings. The rest came from changing from an EPC model to sort of a hybrid EPC EPCM, where we'll actually have an owner's team, but some of those overheads that you get with an EPC model have been reduced. And then the fact that we were able to change the manning levels, we were able to make the airstrip shorter because we'll go with airplanes rather than jets. The camp size comes down, and you have a whole bunch of ancillary things that flow on from that. And then there were, rats and mice. There was pipeline costs and things like that we managed to come down. Steel and, and all you get 20 or 30 things where you're saving $1 million, that starts to add up. So what that meant was that the capital came down by $100 million Australian, from almost 500 million to below 400 million, which is about 253 US.
What's your break even?
So that was an outstanding result.
What's your break even, Mike?
Pardon me?
What's your break even price?
36.75 is break even. So if you put that price in our model, the NPV is 0.
Okay, got it. And you're looking for, I noticed you used to talk about looking for $60. You're now looking at 55, which I think is comparable to what a lot of people are asking for in the market as an average. Do you see that happening anytime soon?
Well, we introduced in the DFS refresh, I've introduced a new term because we know this industry loves acronyms, which is the VWC, the volume weighted contract price. So what we're doing is we're going to have a spectrum of prices, above and below 55. Some people see the price going to 65, 70. Certainly there will be utilities buying at that level, or they're not going to get uranium. And obviously, as a salesman, you might go in with a lower price up front. If you get one of the big utilities coming in, you might offer them a bit less than 55. But we do know we're getting close.
But that's not.
We'll see the next.
That's not the question,
Sorry?
and that's not the question. What you want to get versus what is happening in the marketplace is, when do you think you're going to be able to get 55 average contract price on board? Like, how much longer will you have to try and keep the lights on until the market moves? That's the question.
Yeah, well, see, that's the problem, Matt, is you just don't know. And we talked about this before, and we have been saying for 2 years that it's next 6 months we'll get it. The next 6 months we'll get it. And Matt, I'll give you my honest answer. I don't know. I really don't know. We talk to these guys. We know exactly where their heads are at. One day they're going to pop up and say, yes, we'll take that. Thank you very much. And we're going to have to, we got 3.5 million pounds that we need to get rid of. Let's say we do 75% of that. You're talking about 2 and a bit. You don't do 2 million pound contracts. You do 200,000 pound contracts. So we're going to need 10 contracts spread across. So let's say from now till June 30 next year, we're writing contracts. Let's say by June 30 next year, we're at a point where we can start looking at funding. That takes another 6 months. You're in construction by the end of 21. You're in production by the end of 23. I mean, that's our working calendar at the moment. And obviously it is entirely existential, and that is frustrating.
It's hugely frustrating. I can imagine so. But you've delivered, I'd say, 2 bits of quite strong news and one sort of interesting. Environmental management plan approved. That's a big deal. Okay?
It is.
Your DFS refresh, you've saved a lot of money, shaved a lot of costs. That's a big deal. And then, hiring KPMG to kind of give you a bit of exposure to markets outside of the US. That's sort of interesting, right? The market has not reacted to those bits of story at all. And you see your peers, your uranium peers, all in the green, prices are up across the board despite the the fallback on spot price. I mean, what's happening? What are people nervous about with you that I'm not getting?
Well, I'm not getting any feedback. That's the thing. I mean, the feedback I'm getting. We did it's around here somewhere. We did a stakeholder perception survey, and there just was no bad feedback. Like the team, like the project, like what we're doing, tick, tick, tick. And this is what gets me. I don't know if it's just the rats and mice trading, day traders. It frustrates me when you see companies buy a piece of moose pasture in Wyoming, go out there with a scintillometer and take some readings, and their share price goes up 25, 50%. I mean, that just, I don't know. Yeah, exactly. What do? You don't want to go spend shareholders' money drilling holes up at Alligator just to generate results. I mean, that's a great asset for a partner to come in on that one. And let's get a partner in there and get them spending the money, right? And get the good results. But, that is the temptation, Matt. The temptation is to go get a rig, go drill at Alligator, get 10 meters at 2%, announce that result. Well, that's just a big sugar hit. And as you'll discover when you start riding a bike, that sugar lasts for about 15 minutes, right? You need sustainable value. And, we're doing all we can. I've done this before and it's worked, and it is frustrating, Matt.
But here's the thing, Mike. You're going to need to, given you don't know when you're going to be able to start contracting. I say you're going to need a few of them because people aren't going to sign big contracts with you because you're new. You're new to this, right? So you probably will need 8, 9, 10 of these contracts in place to kind of get the ball moving, get cash flows moving. You're going to need to raise some capital. You are. But if your share price isn't moving, it's hugely dilutory yet again to your shareholder, your current shareholders. It's going to be a great deal for whoever's coming in. It's fantastic. But, there's going to be people, your shareholders are going to be hugely frustrated. The Andrew Foresters, possibly even the GK Capital guys, are going to be frustrated unless you can get things moving. What have you got in your armory to kind of get out there and tell people that you are going to be able to get into production? Because I think that's been a bit of a problem. People not believing that you could get the environmental component done, and that you would be a miner.
No, I don't. Look, I don't agree with that. I don't think there's anyone out there, certainly of our major stakeholders, who don't believe we can get this into production.
Well, your stakeholders,
that's not the feedback.
Of course, your stakeholders wouldn't say that. I'm talking about other people investing in other uranium companies and not you.
Oh, yeah. Well, that's a good question. And that's one of the reasons why we're pivoting the message. So, for the last 3-4 years, we were thought leaders in the uranium space. That's how we met. There weren't very many people out there talking about the macro. And then that space started to fill up with some very, very good people who are spending 100% of their time on it. Mike Elkin, you've come in with your uranium show. You've got the fella, Dustin Garrow.
Yeah. Yes, he's been on many times.
In the States, you've got Brandon.
Yeah.
So that space is filling up with some really good, really smart commentators. And so, obviously that's not working for us. So the pivot now is, let's talk about Mulga Rock. Let's talk about how it shapes up against our peers. So people start looking around and going, well, who is going to be the next uranium mine? You go, well, geez, there's not many. And here's one that's sitting there with an all-in sustaining cost that's comparable with the high-priced Kazakh operations. So those are the things we need to hammer home. Those are the things we need to get out there and say to people, this is real. This will happen. And I suppose you're going to see new messaging from us, and that's the armory. We've got the bullets we've got now in our gun with the refresh. It's a pretty powerful message to be out there talking about.
It's a better story. It's a better story. I wouldn't say it's changed much. Well, clearly the share price would agree with me. But can you just clear something up for me? Alligator River, right? I think, again, there are people, and again, we've seen conversations out there that people believe that if Alligator River is to kind of get going again, that you're going to take your free cash flow, hopefully, that you get from Mulga Rock and plow it back into the ground at Alligator River. But you've just talked about bringing a partner in. So what's the plan for Alligator River? Just clear that up for everyone.
Sure. So the plan with Alligator, if you wait for free cash flow, you're years away from doing anything with Alligator. There is a good deposit up there at Angularly. Angularly was at the same level of study and approvals as Mulga Rock, there's no doubt you'd be mining that one first because it's smaller, cheaper. You'd be underground mining that very quickly. We want to progress Alligator. It's a great target, but we don't want to dilute and be just an explorer. We want to be a developer. So we have two choices. One is we just let that be until we have cash flow, or we can go up and do some work. We do have an obligation to the Aboriginal people up there to do work on the ground because there is a cash flow for them. So there is a certain amount of, I hate the term, but license to operate to get on the ground. And it's a good target. It's a good target to bring someone into. We certainly wouldn't go beyond 49% for a partner coming in. We'd want to maintain operation and control because it is a good asset. And that's why we've hired KPMG, is to explore those options, to give us the options. And look, we're not going to have somebody come in and undercut us on that. It has a valuation. We have an internal valuation on that based on the scoping study that was done. That's the valuation we'll stick to. And if somebody comes in and wants to earn in, then we'll let that happen. And that way you can accelerate the process up there. And 51% of something's a whole lot better than 100% of nothing. So that's really the plan for Alligator.
Okay, great. Thank you for clearing that up. I'm assuming no conversations as yet. Early days, and plus people are looking at the uranium space, not quite sure what they'd be getting into. So when would you look to start those types of conversations, and where would you be looking?
So KPMG need to get into the data room. We need to start putting IMs together, and then we'll go from there. So timeline, I would think weeks and months, not months and years. But we want to have start getting some nibbles before Christmas. Absolutely.
Okay.
My light just went out.
Your light went out. I hope not.
Oh, it did. The battery's dead.
Oh man.
Oh well.
You need to increase the budget. Just one last question on DFS then, because I think that the light was telling us something.
Yep.
Are you nervous at all about a weakening US dollar?
Well, the US dollar, AU dollar is always tied to commodity prices. With strong gold and strong iron ore, yes, the dollar is going up. Our dollar is going up. But gold booms and iron ore booms don't last forever. I've lived through probably 4 gold booms since I've been here and 2 iron ore booms. So I would think, we've looked at long-term price, and that's the long-term from 23 onwards that we've set it at 65. The price stays at 70. That reduces our NPV by about 170. So yes, it has an effect on the project. Obviously doesn't change the US numbers. But again, it's one of those things I just don't know. But right now our dollar is strong because we've seen historic iron ore prices, historic gold prices. So they certainly don't last forever.
Okay, I think that'd been interesting to watch. The only reason I ask is obviously with all of this quantitative easing going on and people talking about fiat currencies struggling, I think gold's benefiting from that. But, for the rest of us normal mortals, we must have a view on what the future looks like and what these currencies are going to do. So, well, I guess we'll follow that with keen interest. Mike, thanks very much for the update. It's been a while. Things are moving. Great news. Well done. Stay in touch. Pick up the phone. Let us know as things happen. Okay.
I will, for sure. And I do apologize for the long delay, but we really wanted to have some news to talk about. And as I said, Matt, you've got some great people come on your show weekly. I do watch it, and you've got some really knowledgeable people in there. And I didn't need to add to the noise, and I certainly wanted to, bring up some good news on Vimy. So thanks very much, Matt. You're a great service to our industry, and we really do. And I mean, we really do appreciate the work that you